David Bahnsen with us today. He's with me for the hour to cover this market. David, in this market, with tech and AI so volatile, I think people want a solid dividend from the stocks that they buy, and that's right up your street, isn't it?
You just teed that up so beautifully.
It was a commercial for you.
Take it right off the tee. It's not just the dividend they want. It's the dividend that signifies a more stable company. And that's always been my argument, why I fell in love with dividend growth investing 25 years ago. The dividends are not the reward. They're proof of the reward, which is a company that's more stable. Right now, these big, huge up and down movements, you have to time things perfectly to actually make money when you're buying stuff at 60 times earnings, or sometimes when they lose a bunch of money. AI has got a lot of opportunity, but there's a ton of speculation. There's going to be big money made. There already has been.
Yep.
There's going to be big money lost. We like the dividend growth investing, cash flow, consistent profits, stability.
You often have a different kind of view of Nvidia. It's a peculiar point of view on Nvidia at times.
Peculiar.
What's your view on Nvidia for this Wednesday afternoon?
Well, is this peculiar? It's one of the most profitable companies ever. It's one of the most successful companies ever. It's innovative and technologically brilliant, and it is brutally overpriced. I don't think it's peculiar. I think that should be the consensus view that every sensible person believes. Why some people don't believe it is they hope it continues going higher, even though it's trading 60 times next year's earnings, and it is involved in this circular trade where everyone is paying each other money to buy each other's products, and they think that's going to make things go up forever. Nvidia could have a great quarter. In fact, we know they will have a great quarter, but the stock's not going up or down Wednesday based on the last quarter. It's going up or down Wednesday based on what they say about orders going forward, as long as these Microsofts and Googles and Amazons keep paying huge money, then people think Nvidia can't ever go down. The problem is the rate of growth has to continue growing, and it won't. And the capex all these companies are spending continues to grow. That leads to a point in time which we have a very bad ending.
You didn't disappoint, David.
Well, thank you. I didn't know that was peculiar, but I'll take it.
You'll take it.
I'm surprised by these numbers. Fortunately, all of my family's local. I don't have to get on a flight to see them. But I think if I did, I'd say I'm not dealing with it this year.
Yeah, I think I'd walk away from it. How about you, David?
I've been flying almost every day, and I haven't had any delays at all. And I think I've just been lucky. My whole company flew 90 employees a couple weeks ago. Nobody got delayed. So I think it's kind of been certain pockets have been worse than others.
I'd like to see it all resolved by Thanksgiving, so we could all travel.
Absolutely.
I'd like to join his company. It seems like they've got like a beautiful good cloud over them.
We've had some good luck, apparently.
Are you hiring? All right, let's move on. Yes, I want you to repeat your suggestions about
I just want to be clear that the total earnings of all of these companies, the most profitable companies in the history of the world, is not enough to cover all the capex they're spending on AI. So the end of this cannot be what Jensen says on Wednesday, because ultimately these companies spending all the money with Nvidia have to get a return on that money. There has to be some future understanding or path of profits for real life application. Right now, it's not only lacking, it's laughably lacking. That they need trillions of dollars of ROI to justify this level of spending.
You were dying to say this, weren't you? You've really...
I'm dying for everyone to understand what's going on, that AI is all at once a huge thing. It isn't hype. It's productive, it's wonderful, and that people are paying way too much to buy it.
So Berkshire acquired almost 18 million Google shares in the third quarter. It's shocking, considering Warren Buffett shies away from technology, and this could be, David, a sign of confidence in Google's AI spending.
It's also going to be a sign of confidence that Google was the cheap one of all of them, that people were worried that Google was losing their search engine business to AI, and they've really actually been more of a value play in this tech side. And we ended up buying it not in our dividend portfolio, in our growth enhancement portfolio back in the Liberation Day sell-off, and have made a fortune. And so I'm in agreement with Berkshire. Google has a valuation story. It's totally different than the rest of these names.
I wonder what Warren Buffett does all day long. I mean, he's got hundreds of billions of dollars of investable money. What does he do? It's surrounded by screens. Looking
I think he gets a real feel for companies, and I think he gets on the phone.
Never, ever been surrounded by screens his whole life. He was the most successful investor of all time without looking at screens all day. He looked at people. He invested in companies, cash flows. Sound familiar?
Yeah, okay. Check Bitcoin. Below 100 grand. Actually, down to 94.6 right now. What's behind that?
I wanted to tell you it was rebounding today. That's not the case. But if we get these $2,000 tariff rebate checks, like we got the stimulus checks during COVID, maybe some retail investors will plop that into the crypto.
Oh, God, we should hope for that. That worked out really well last time.
So are you going to offer to execute Bitcoin as you've just executed Nvidia?
Not at all. I have no opinion at all. It can go to 1 million. It can go to 0. Nobody knows. But if we get stimulus checks to gamble with, maybe that's a great thing. But I think
maybe not.
Partially joking. Partially.
All right, David, it's time for your dividend picks. You've got 2 of them. Lamar Advertising is the first. What do you got?
Lamar jumped about 5% last week when they announced earnings. They make these digital billboards all over the country. It's just a great cash flow company where the founding family owns a bunch of shares. They grow the dividend every year, and it's totally outside a lot of these other cyclical stories we're talking about. A big 5% dividend yield growing every year. They pay special dividends, a lot of cash flow. We love Lamar.
The second pick, actually, is the Simon Property Group. More people.
Listen, you have a great dividend that grows every year, and they have the highest occupancy they've ever had across their portfolio of high-end malls. Simon Property owns about 280 malls, but they're not the ones that are in bad neighborhoods that are vacant. They're really upscale. They bought a lot of great assets. And, by the way, getting higher per-foot rent than they've ever gotten.
You know, just a couple of years ago, we were writing off the malls during the pandemic. They've come back with a vengeance.
And what people missed is that Simon had the ability to convert certain malls that did hurt in the pandemic or that are not doing as well, converted them to different types. There's a lot of mixed use. They have more entertainment than traditional shopping malls, and Simon's made an awful lot of money doing that.
Are they also walking away from the big anchor department stores?
Right. And they bought all those JCPenney boxes. They converted them. They sold some to Amazon for fulfillment centers. They just became a really good manager of the real estate.
What do they pay dividend-wise?
About 5% current yield and
5%.
growing at about 7% a year.
I like 5%.
Yes, I know you do.
I want to get back to the dividend checks. Yeah. I know you've got a lot to say about that. The $2,000 dividend checks paid for out of tariff duties.
Okay, well, it's fun that we were just talking about dividend stocks because they pay a dividend to owners from the profits. Calling this, what the administration is proposing, a dividend check bothers me. It's a redistribution check. Where did the tariff revenue come from? From small businesses, big businesses paying it. They're not refunding it to the people who paid it. They're taking it and then giving it to other taxpayers below certain income levels. Bernie Sanders loves these ideas. Elizabeth Warren loves these ideas. It's redistribution. People can either think it's a good idea or a bad idea, but it's not a dividend. It's taking taxes from some Americans, business owners, and giving it to other Americans. I'm also against it for all the reasons Steve Moore said. I think that it is unnecessarily inflationary. It's new money, stimulates demand. What we need is more supply. That's how we bring inflation down. Produce more goods and services. And also, it employs people and it gives them happier lives. I'm all for that.
It's also buying votes. It
is, but it's not traditionally the way that Republicans have tried to buy votes.
That is absolutely true. David, thanks very much for being with me for the hour. Appreciate it. Always.